Hey folks, it's Vic Noble here with a weekly trade example for you for the week ending of February 26th of 2010. And before I get to it here, I just want to let you know I'm going to be away for a little bit here and won't be returning till the 12th of March. So there will be no more. There will not be another weekly trade example until the 19th of March. Okay, the week ending March 19th. So let me just check that date here for sure. I think that's the one, March 19th. And so anyway, on this pair here, yeah, that's it, March the 19th. On this pair here, I want to show you something. This is the euro pound, and you know we talk incessantly about the need to watch for areas that we would expect there to be support or resistance. We're talking about old highs you see over here, where these highs just met and there is resistance. We could expect there to be resistance. There may not be, but we can expect it. Lows were hit here. We had a pretty good bounce up. And so on. Then it came through it, and you can just see it all here. This area here used to be support. Look what happened when price traded, came back, it was resistance. Actually over here it hit it again. Look what happened when it came back to here. In fact, if you look at this level here at 88, let's just call it, let me just get this off of here, the 88.30 area, right in there. Pretty darn good level of support and resistance for a long time. It's just a level that this pair has been watching a lot. And the other day I want to show you what happened here. And in fact, when it came all the way down here, see, to this level down in here, let's just have a little look at this. Where did it stop? It stopped right down at around, let's just put this in here, approximately here. Whoops, in this level right in here. See this? Support. And then it just could see all those wicks above here. It couldn't get going. Hit it again. Finally went above, and it came down and retested it. You want to keep an eye on price patterns when this happens. Okay. In fact, by the way, you can see what happened when it came back up and retested this level right in here again. It acted as resistance. Now I want to focus on this area right here. We had a woman in our Live Connect Coaches Corner service take this trade here. Very good observation. Did a great job on it. And what she saw is that once this level was hit, this is the level we just looked at on the daily chart. Okay, this 86.30 area actually made it almost down to 8,600. And what happened is that price was going lower, but the MACD was starting to go trend higher. So she just watched it and observed it. Now this was a very, very patient trade. It was a longer term trade. She watched it rally up and she bought it right down in here. See that? And this trade had tremendous profit potential. It just went up and up. Actually, we use Fibonacci retracements and extensions. I'll show you what that looked like. Right, like this here. These were the retracement levels: 38, 50, 62, 79. We have very specific places we like to buy them. And then because this is what we call a qualified setup, and we ended up buying it. She did end up buying it down here. You can look at the move up here. I mean, it was a tremendous move. Now you're going to have, everybody's going to do this a bit differently. You're going to have different places where you're going to get out, etc. But the ideal thing is you want to hold these for their extension numbers, which is up at 8,900. That, guys, is a huge, huge trade compared to the risk that you had to put in there. I mean, you're looking at several hundred pips of profit on this pair here. So very, very nice. But the key to it is that what you want to do is recognize, we talk about this all the time, where is expected support, where is expected resistance, what's happening when price gets there. Do we want to buy, do we want to sell? Is there a pattern setting up that we recognize? Because we teach all these different patterns, what's happening. When price comes up and retests these lows right here, okay, it gets broken, comes up, retests it, what are we going to do? So you have to have a game plan for all of this kind of stuff, right? And then if you have a pattern that you're looking for and it sets up, that's your trade. Don't try to do everything. Pick one pattern that you like to see and stick with that. Could be MACD divergence, doesn't have to be. Right? And actually I had a guy, there's another point here. I had a guy in the coach's corner ask me, well, I think, do you think I should just do MACD divergence? And that's not up to me to say that's all you should do. There's other kinds of trades. We have these trend trades that we show in our Live Connect. We have pivot zone trades. There's VIC trades. There's noble entries. All sorts of things and it's not there to throw a whole bunch of confusing things at you. It's there for you to look at and assess if it's the kind of thing that suits you. In this case here, for example, if you don't have the time to be looking at your charts all the time, this is a longer term trade. This is a 4-hour chart based on a daily setup. right? So you have lots of time to look these over and put them in. And if that suits you, do it. If you see it easily, that's what you should do. Don't try to do everything. Try to do one thing, right? If you're having trouble with your trading, why on earth would you be trying to do, 5 or 10 different things? Pick one, right? Cut down the currency pairs. Maybe you just don't want to do one currency pair, okay? And then when you get, 25 or 30 trades under your belt of doing the very same thing over and over and over, only then will you know if, not only, you'll know two things. You'll know if the methodology is any good, right? Or it's just a bunch of garbage. And you'll know one other very, very important thing. Can you do it? And it's one thing to sit and look at all of this theoretical stuff and that, but if you can't execute the plan, what good is it? That means that you got to work on yourself. And that is, by the way, usually more the case than working on your trading plan, your technical setup. It's mostly working on yourself. It's psychological. It's huge. It's just like 90% of everything. You can all learn the technicals and the fundamentals and the chart setups and patterns and all that. But psychologically, I mean, I can show, you could hand over the most profitable trading system ever invented, okay? Give it to 10 people, and probably most of them won't be able to make money with it. It's psychological. They don't execute the trade properly. They go and find something else to do when there's a trade setting up, or all sorts of things happen. They get in wrong, they get out wrong, they manage their trade wrong, all sorts of things. So it's a matter of finding something that you can actually do, okay? And there's lots of little techniques that we teach for helping you do that, because it's not easy. I mean, there's a lot of information out there, and it's always hard to say exactly how you should handle it. So anyway, hope that little example helps you, just showing where we expect there to be support, and then recognizing a pattern right there, right where we thought there was going to be support, and trading it. Okay, stepping up to the plate and trading it, managing risk, managing the trade, all that kind of stuff. Okay, there you go. That's a little example for you for the week ending February the 26th. Boy, last day of February, 2010. Thanks so much. We'll see you in a couple of weeks, and take care. And above all, everything, if I can tell you one piece of advice while I'm gone, manage your risk impeccably. Okay, manage your trades impeccably. Do everything that you have control over. Control it. Do a great job of this, and you'll be off to the races. Thanks so much. Talk to you soon.